Well, hello, everyone. Thank you so much for joining us today on this webinar. We're sorry we started late. We had a few technical difficulties, but we are here and ready to get started. I'm going to wait for some more people to join us, but I am Carrie Wise. I am the Chief Marketing Officer here at AutoFi, and welcome to this webinar on Bridge the Trust Gap. As I said, we're going to give everybody a little bit of time to join, and thank you for those who are patient. We had a few technical difficulties as we were launching this webinar. So go ahead and if you don't mind, put a comment in on where you are, where you're located within the United States. I'm curious to see who we have on and where you are located. So send a note in to the host or panel. We got Fort Lauderdale in the house. Hey, Melissa. And let's see, New Hampshire. All right. Who else do we have on here? Ooh, Denmark. Oh my God, I feel so honored. I am international these days. I love it. Thank you. Is it Johan or Johan, I think is how you pronounce it. Hopefully I got that right. We got Crystal Lake, Illinois. Love to see that. Fun fact, my brother played for the Chicago Bears back in 2005, so I was in Illinois a lot. Let's see. Yep, we got another Chicago in Brendan. All right. Anybody else? We got anybody from California here, or is it just me? Might just be me here in California, lonely California, sunny, lonely California. All right, we'll give it another minute and then we will go ahead and get started. Oh my God, we have someone from Mexico City, Alejandro. Thank you for being here. I love this international presence. I love to see that. All right, all right. Well, as I mentioned, all of you are muted by design. We are just trying to control the noise that comes in when you're doing a webinar like this with lots of people. If you have questions, you can either put them in the Q&A like Alejandro just did for me, and my team will make sure we're answering, or I will try to answer questions as we go through the presentation. You could also chat it in as well as you guys have with your locations. The other thing is that this will be recorded, and we will make sure to share this out after via email to all the attendees and via on demand for those who couldn't attend. So thank you for being here. My name is Carrie Wise, Chief Marketing Officer at AutoFi. I've been in the automotive industry for 25 years across a lot of different sectors. So I've been in sales. I was leading training teams, both internal and in the dealership. And now I've been in the marketing realm. I've also been in analytics with dealers. So I've worked a lot with dealers and OEMs across a lot of different areas. I've been in technology on the tech side of the business since 2010. So I've seen a lot change in terms of not only how dealers are using advertising, but how they're responding to customers and how technology is playing a big part of that. I spent my first 12 years of my career at JD Power and Associates. And so I really spent my first half of my career from the consumer side, doing a lot of research on the auto retail experience and interpreting the consumer to both OEMs and dealers. And I love this particular topic on bridging the trust gap and using technology to reduce friction and close deals faster. And what you're going to see today is some insights that we have learned here at AutoFi and really working with dealers, thousands of dealers across the country. And one thing I want to just kind of level set for those who aren't familiar with AutoFi, we are one platform, and we like to say we help dealers sell smarter, not harder. When it comes to that one powerful platform that includes digital retail, deal estimation, desking, lender routing, F&I menu, all of that in one. And today you're going to hear some learnings from our top performing dealers. I like to say, like, if this isn't my opinion, it doesn't really matter what I think. It matters more about what's actually working. And so you'll see a couple pictures here of our team, our performance management team that's going into dealers and consulting and advising them, and our training team that is really really selling side by side with the dealer. You know, we don't believe in just classroom training. We believe in actually getting in there and helping them do their jobs so that they can learn by example. You'll see Joe St. John, our VP of training, is actually like, you know, in stores selling cars. And so we've learned a lot by working with some of the best sellers in the business on the best practices. And one of the best practices that we know is that technology can help overcome this trust gap that I mentioned earlier. So let's jump in. Speaking of the trust gap, you know, I always like to say trust is the elephant in the showroom, right? And we all know the term elephant in the room, right? It's that thing that we don't either want to address or we don't address. We'd rather kind of just move on and not necessarily tackle it. And I say that because in my mind, when it comes to the friction that we see in the car buying experience, a lot of it is centered on distrust. And it's distrust on both sides. You know, it's not just we typically think, oh, the consumer doesn't trust the dealer. Well, the dealer doesn't trust the consumer, right? We've all heard the terms buyers are liars, right? And so it really is this elephant in the room that if it's not tackled, it's going to be really challenging to ever really elevate the sales process in auto retail to this next level. And so I want to kind of touch on that. You know, we've all seen this chart before, right? Which talks about the most trusted and least trusted professions in the automotive industry. And to me, this is frustrating. Like decades, I've seen the same chart, and as an industry, we sit kind of in that same place at the bottom of this ranking, you know, next to politicians, you know, telemarketers. That's the first time I've seen them at the bottom here. But you know, in the industry, we all know has progressed, right? We have made a lot of progress in terms of improving the customer experience. I know more good dealers than I know bad dealers, right? But despite all of that effort, perception does not always match the reality. And it is what it is. It's frustrating when I typically talk about this. I get a lot of defensiveness of like, you know, those customers, it's their fault. But at the end of the day, we have to address this. We have to tackle it. It is what it is. Perception does often equal reality for customers. And the dealers that can overcome this are going to be in the best position in terms of fast tracking to get to yes and making more money. And I want to show you that today. There was a recent study that came out by KPA. They did a dealership trust survey where they actually dug into the trust gap a little bit deeper. And they asked, trying to figure out what was driving that. And what they found is that while most consumers haven't necessarily experienced a lot of negativity in their experience when it comes to their perceptions, 84% of them said price transparency is lacking at most dealerships. 76% said they don't trust the dealership in terms of being honest about pricing. So the real issue at hand here is the negotiation. It's the price negotiation that is causing that friction, that's causing that anxiety within the car buying experience. And if you think about it, even with the technology that has come out, including AutoFi, you know, when we came out with digital retail, digital retail and this technology hasn't necessarily helped dealers overcome this, right? We've done a decent job online, but the showroom experience fundamentally has not necessarily been overhauled in terms of technology. There's some opportunities there. And this chart is what I like to use as evidence of that. When we look at the car buying experience from 2018, 5 or 6 years ago, you see, you know, most customers are going to buy a car online. The average customer is spending 14 hours shopping before they ever even talk to a dealer, 14 hours shopping at home in most cases. And they're going to about 2.5 new car dealerships 5 years ago. This is 5 years ago. And it's taking about almost 190 minutes to buy a car. So over 3 hours to buy a car. Now, with all this technology and all of these, you know, innovations in the last 5 years, particularly after COVID, you would think that this chart would look completely different. These numbers would look completely different in 2022. So I want to ask you, what do you think? How long does it take to sell a car today? In this same study, if we did the same study today, what do you think? How many minutes or how many hours do you think it takes to sell a car today? Go ahead and put it in the chat there. And I want to see if you guys can guess what it looks like today. All right, Alejandro said the same. Anybody else want to guess? Is it the 187 minutes? Is it better? Have we improved? Where do you think we are today in terms of selling a car? The time it takes. Okay, well, Alejandro, you were close, but not exact. So it's still, consumers are still shopping as much as they were on at home. They're visiting less dealers, and we have slightly improved in terms of the number of minutes it takes to sell a car, 172 minutes. Nevertheless, though, it's still over 3 hours to buy a car. And it doesn't have to necessarily be this way. When we look at the processes, there are some bottlenecks in the process. But I would say when it comes to trust, there's also a lot of fight from the customer who feels like they have to come in armed and ready to battle in order to make it through that price negotiation, in order to make it through the finance experience. And we are seeing dealers that are looking at this with a different lens and really getting outcomes that most dealers would dream of. And so I want to talk about that today. You know, oftentimes when I talk about this, a dealer will say, "Well, I'm doing all the right things. I'm transparent. I'm doing everything up front." And it's the customer. The customer just wants to fight. They like to negotiate. And oftentimes what ends up happening is that our processes and strategies might be completely kosher, you know, above board, but inadvertently we're validating some of the perceptions the customer has. You know, most dealers aren't using the old school Foursquare, although some still, right, are using that as a way to work the deal. But even the back and forth to the desk as an example, right? You know, what do you think customers think is happening when someone leaves them and goes back and forth to that desk? Anybody want to write that into the chat? What do you think the customer thinks is happening when someone goes back and forth to the desk and they're leaving them to talk to their manager? Any idea of what they might think is happening? So I think one of you guys put it in the Q&A. They think that there's deception in some cases, right? Like that the management's getting together and trying to plot how they can get the customer to pay more money. And so oftentimes that's not what's happening, right? We have a green P. He or her needs the management to be involved to help them work the deal. But the perception, as I said earlier, is everything. Perception equals reality. And so we have to be thoughtful about that. So let's jump into, before we get into automotive and these best practices, the psychology of the customer, the psychology of the customer. And a couple of principles that I just want to kind of lay out as a foundation. And the first is what I talked about earlier. Perception equals reality. Yes, it may not be true. Maybe we are above board, but how the customer perceives us is really what we should absolutely be concerned about. Let's talk about that a little bit. What do you see? And I really need you guys to participate here. What do you see in this picture? First thing you see, write it in the chat. Tell me the first thing you see. Don't think about it too long. All right, first thing you see. Okay, so a couple of you have said tree, but then half of you have said you see two faces, right? And I love these kind of optical illusions because it's exactly that, right? I see a tree. And now I see the two faces now that you've said it, right? Like the first thing I saw was a tree. And it's amazing that the same situation can be looked at completely differently by different people, and they're based on their perspective and where they're coming from. And this is where we run into that block when we're bumping heads because we see things differently. Here's another one, right? I love this meme, right? Where one person sees 4 blocks, on the other end, they see 3 blocks. You know, I love this quote. We don't see things as they are. We see them as we are. We see it from our perspective. And when we're working with customers, when we're in sales, interacting with clients, we have to think about it from their perspective, not ours. The other thing that we know is that there's all kinds of research that says that consumers trust technology more than a person. Let me say that again. Consumers trust technology more than a person. Now, this doesn't mean that I'm pushing for AI and robots and they're just going to replace people, but it means that technology can certainly enhance the experience and bridge that gap between the customer. So let's think about it in your everyday life. Would you rather get a ride through Uber or this guy? Right? No offense to this guy, but would you rather get a ride from Uber or just a random guy that drives up? Would you rather rent a vacation home through Airbnb or this clown? Would you rather invest your money through a Fidelity app or some kind of investment app or this guy, right? Like that's the world we live in, right? We are in a world where we deposit our money now through apps, right? We don't even go to the bank all the time. And so there is this whole concept of technology. And in auto retail, this is a huge opportunity. And I'm not talking about digital retail, a widget on the site. I'm talking about how do we arm our people with this technology, because people trust a screen in many cases more than they're going to trust the words out of your team's mouth. The other principle we got to get out the way from a consumer behavior standpoint is that people are control freaks, right? We love control. And when we're out of control, it causes anxiety. It causes us to freeze. And really, when it comes to consumer behavior and when they're buying and making decisions, they're not looking for actual control. They're looking for at least perceived control. Like make me feel at least like I'm in control, whether I'm in control or not. Because the reality is that in many industries, I can't be in control. If I'm getting surgery, I can't be in control of that experience. The surgeon has the expertise, but I want to feel like I have choices, right? If I'm I'm going to court and I'm working with a lawyer, I can't be in full control of that. The lawyer has to be in control because they have the expertise, but I want to feel like I have choices. Same thing in auto retail. Are we giving them choices? Do they feel like they have some level of control, or are we thinking like we were trained 20 and 30 years ago? And I remember this kind of training in auto retail where it's like, get control of the customer, control the sale, control, like that is a little outdated and it doesn't align at all with how consumers are. Let me bring up this American Red Cross study that was done. It was actually where they looked at people who were going to phlebotomists and getting shots and getting blood drawn through the American Red Cross. And what they found is they had two groups of people. One group they allowed to decide on, to choose which arm they wanted the shot in. Did they want it in the left arm or the right arm? The second group had no choice. The phlebotomist just chose the arm, no choice. After they examined both groups, they found that the group that chose the arm they wanted for the shot experienced less pain and was more satisfied with the overall experience than the group that had no choice. Same exact experience, but because I could choose my arm, for some reason, I felt less pain. Another example of perceived control is removing ambiguity, right? Consumers want to know what's happening. And when they feel like they're out of control, like something's happening behind the curtains, it makes them feel that they're lacking control. And so an example of that is when you look at like Disney, right? If you've ever been to Disney, Disney Genie Plus, it tells you how long a ride's going to take, and you can actually schedule and and put yourself in the queue so that you're first in line. When you look at research, studies say that if you look at two groups and they're waiting in a line in an amusement park, the group in which we set expectations for, we tell them this is going to be a 45-minute wait, versus a group that we give no expectations to, even with the same wait, the group that we set expectations with feels like the wait was less, like it was not as long, and they're more satisfied with their entire experience. Same thing. It's the opposite, that by setting expectations, helping them understand what's happening behind the curtains, it actually gives them the perception of they're in control. And back to the amusement park example, I could always get out of line. I don't have to go through it if I'm not comfortable with 45 minutes. The other consumer principle that we just got to get out the way is that offering choices impacts the consumer's decision. A lot of times we think that, no, we're gonna just sell one thing, we're gonna give them one path, and that's gonna help them close. We're gonna help close that customer more effectively. But what we find in consumer research is when you don't have a lot of choices or context or relativeness or comparison, it actually causes you to have to think more as a consumer. Like, I don't know if I'm comfortable moving forward. Let me go home and research this more. Let me go home and talk to my husband or my wife, right? Less choices causes them to freeze. Now, on the opposite end, too many choices is a bad thing too. You give someone 10 choices, that paralyzes them. It's too much. And so there is a balance, but we all know that choice, though, will cause a customer to want to move forward and it impacts their decision. Let's use this example. There was a study done where they put two microwaves in front of customers. One was $109, one was $179. Please put in the chat, which of these microwaves do you think consumers chose in this study? Did they choose the cheaper one or the more expensive one when they had two choices? So which ones do you think they put in, they chose, right? Kelly said the first one. Anybody disagree with that? Are we all going with Kelly? Yep. All right, so Kelly, you are absolutely right. 57% of consumers that were in this study chose the cheaper option. And we typically see that when you only get two options, most people will gravitate towards the cheaper, least expensive. Now, let's do another version of this study. They added a more expensive $199 microwave. Now tell me, which of these three did most consumers choose? Which of these three did most consumers choose? The first, did they choose the least expensive, the middle one, or the most expensive? All right, we have one guess, which is the most expensive. We have the second one. Kelly's back to the second one. All right. It's actually the middle option that 60% of customers choose. And no matter what research you see, you will see this effect. They call it the compromise effect. And oftentimes when you have three choices, you gravitate towards the middle. It's why most fast food restaurants in America have small, medium, and large, right? It's why Starbucks has a tall, a grande, a venti. It's a psychology that they know that by offering a more expensive option, they call it almost like the decoy effect, it will move you back towards the middle. Now, in this study, these were the same microwaves. And in one, when I only had two choices, I chose 109. And then when I had three, I spent $179. I spent more. And so it's just this psychology that offering choice in some cases could help you make more money, but make the consumer, though, feel better about their decision because they have context and relativeness. And it's a really important concept. One more example of choice. The Economist has a publication on web, on print. This is kind of an old study, but they made them, they were showing different options. You could buy the web only, they had a print only option, and then they had print and web for the same price of print. Which of these three do you think most customers chose when you saw these three? Anybody want to guess? All right, the answer is that most customers chose, in this case, the print and web for $125. And really what this came down to is customers like a package. They like a good deal where they'll spend more money if there's some value. And in this comparison, this makes a lot of sense. I can get one for $125, I can get both the print and web. In this same study, when they only showed web and print and web as options, most customers chose web only. So all of this is to say that how we deliver and how we sell and offering the customer choices and also packages certainly helps us not only help the customer make better decisions, quicker decisions, in some cases, it actually helps us make more money. So I want to jump in now to some best practices that we're seeing from some of our top performing dealers. And these are dealers that are using us both online, but in many cases, I want to talk about the showroom. I want to talk not just about digital retail, but how do we use technology and arm our people so that they can bridge that trust gap. And when I talk about these top dealers, I want to lead with some metrics, right? Because you might think, well, customer satisfaction increases. Of course, it increases when technology is involved, right? That's a given. I think what is more surprising when you look at some of the metrics of dealers, and these are dealers that are using AutoFi primarily, like not just online, like I said, in the showroom, in their showroom selling experience. It's taking them 28 minutes to lock in a deal. And when I say lock in a deal, that's from checking that customer in and starting that negotiation through a lender approval. Your average process is probably like 90 minutes in that negotiation process. It's less than 30. The other thing is that these dealers, when they're arming their team to more independently have these conversations using technology, are making more money than their non-AutoFi sales. On average, when we look at our top dealers, they're making almost $600 more incremental back end profit per deal. When we look at our showroom dealers, it's even higher, upwards of $800 to $1,000 more back end profit on their AutoFi deals versus non-AutoFi. And let me help you understand from a hypothesis of what's happening there. We often find that the customer's ready to fight. They come in, they're involved in the transaction. They're involved in working their deal. They have choices. And so they're actually more comfortable to say yes. And they're more comfortable on the back end to spend money on F&I products like gap insurance and warranty and all of that, because they were a part of, they weren't shoved into a deal. They were collaboratively working that deal with their salesperson, and it's coming out in the numbers. And so let's talk about that a little bit more. My first best practice is that we have to put ourselves in the customer's shoes. I know that sounds like duh, but it really is something that we have to take a step back. That means we have to take ourselves outside of how auto retail has always done things and look at it from the customer. How are they perceiving our actions? I love this meme because it hits on even the back and forth to the desk, right? That's a common thing. Most dealers are going to have their salesperson. You get back from that test drive, customers excited about the car, they're ready to talk numbers, and the first thing they're going to do is wait, right? Wait for that salesperson to get the numbers from that desk. And let's hope this isn't a busy Saturday when there's the sales manager is working multiple deals. Let's hope that that's not happening, because it is, this meme is an exaggeration, but there's going to be a wait. And we oftentimes say that you want to talk numbers when their buying temperature is at its peak. We don't want to cool the customer down at their most exciting part of the sales process, sitting there waiting. The second part of that is that we're inadvertently basically validating those negative perceptions, because, as I mentioned earlier, the customer is thinking, what's happening back there? What are they doing back there? Why is it so hard to get me a price? They're not understanding why we do things the way we do. So my first best practice is we got to ask ourselves why and how from the customer's point of view. A couple examples. Why can't you quote me a payment over the phone, right? We've seen examples of customers are coming from miles away, they're calling over the phone, and the answer is you got to come in, right? We have to either have a really good answer for why that's the case, or we're going to lose that customer. They're going to go to someone else who will. Why can't you quote a payment over the phone? How did you come up with that payment, right? I mentioned the Foursquare earlier. A lot of dealers aren't using necessarily a Sharpie anymore, but you might be printing out from your DMS. You're printing out multiple versions from your DMS, and you're giving me a payment, but I don't have anything behind that, right? I don't see how we got to that. I wasn't involved in that, in how you got to that payment. Why do you keep leaving me to talk to your manager? Right? That's a question. We got to understand it from the customer's point of view. How do I know that this is the best rate? Right? You're telling me, but how do I really, really know? The second thing I want to recommend is that we have to enable customers to buy cars how they want. We've all been trained on this 10-step sales process. There's this order of how things should be done. But when you look at actual consumer behavior when it comes to buying cars, it's not a linear process. Cox did a study recently where they asked buyers, how did you complete your purchase? Now, Not shocking, most people do not buy a car end to end online, right? That's a given. They show 7% said they bought a car online. I'm surprised it's even that high. But the majority of customers are going to end up in that showroom, or they're going to do a combination of both, start online and then transition to the showroom. Now, you can see on the bar chart on the right side that it is growing, though, in terms of we're going to have more customers in the future that are going to be moving more towards online, and more that are going to be doing a hybrid of both. So are we shoving customers down our process that works for us, or are we meeting them where they are? So how does our dealership website experience? Is an experience that lets a customer calculate a payment, get a trade value, even get approved for a loan if they wanted. What about the showroom experience? Are we arming our people with the technology just like we would enable a customer to shop on our website? Can our salespeople work a first pencil if a customer, if they were with a customer? If our BDC or internet department was asked to calculate a payment, are we arming them with that technology? In most dealerships today, what's lacking is not necessarily this website shopping experience. It's actually taking that online customer and then reverting them back to the traditional experience that in many cases is devoid of technology, and not as collaborative. What I also want to talk about is this middle section of the phone and email. If someone calls and asks, are we able to work with that customer and send them a link and allow them to calculate a payment with me over the phone? Like, these are the experiences. And when we look at our top performing dealers, they are not anchoring on any one of these. They are making sure that they have all of these in place. So no matter where the customer starts and wherever they end, they have an experience that's anchored in technology that can help move that customer forward. The other thing, when we talk about meeting the customer where they are, affordability is a huge concern, as you all know, especially with interest rates as high. But if we look at this traditional experience, this 10-step experience, we still wait for F&I at the very end. And I am not, just to be clear, F&I is very important. F&I directors, if you're on this webinar, we're not saying we don't need you, but the idea of saving that for the end in a market where affordability is one of the major concerns does not match up to how consumers are shopping. And so we have to think about, how do we move finance forward, not to replace finance, but to tee them up in some cases? How do we let a customer get pre-qualified or get exposed to F&I products, or even fill out a credit app and get a lender approval, right? Not everyone is going to go through these paths as a customer, but the dealers that offer and have this flexibility are going to stand out, and more importantly, close deals faster than most other dealers that are avoiding it. A couple examples, real dealer examples. Taverna Collection, they're a used car, high-end used car dealer in Florida. They also have a Mitsubishi franchise. They call it what the technology, and they work with us in full disclosure, they call it the one call close. I mean, they are using AutoFi to work deals over the phone in a shared experience. They're sending the customer a link in which a customer can start to manipulate down payment terms, if they have a trade-in value, that is in a collaborative experience with the person from Taverna on their end. 50% of their business is done entirely remotely over the phone, and then they're shipping the car. So the one call close, highly successful dealer, Taverna Collection. The other example of this remote selling that we're still seeing, well after the COVID, is Richmond Ford. Once again, Kayla Cody, she's the VP of Richmond Ford. She mentioned that a lot of times the customer will call and ask for a payment, and it would just be like, sorry, you got to come in. And they felt like they were missing out on opportunities. Now they arm their BDC with the technology that allows, once again, to send that link. The customer can work that deal on their own with visibility, or they can work collaboratively with the customer to calculate a payment if that's what the customer is asking for. They've seen an 80% show rate from customers that they're using this experience with. You can look at the averages. I think NCM and other averages is like around 60% or less in terms of show rate typically. Involve the customer is the next best practice I want to go over. And so when we talk about involving the customer, this can get a little controversial, like, no, my salespeople can never handle this experience. Well, with technology, they absolutely can handle this experience. And we are seeing it firsthand in working with our dealers who all have different philosophies, right? So we have dealers that are one person, one price, person's doing it end to end. We have other dealers that are giving their salespeople some empowerment, maybe to have that first pencil with management oversight. No matter what, this isn't about just throwing technology in a salesperson's arm and letting them discuss numbers with the customers. The technology, the advantage of technology is that you can put guardrails around this conversation. So for example, you'll never see, at least in our platform, you can't discount the price of the car. It's not possible, right? You can only play around with the customer's money, not the dealer's money. And so I always like to say that negotiate with their money, right? So you could change the term of the car. You can put more money down. You can work with the customer side by side so that they can get to the payment, because we know that most customers are payment customers. And by them playing around and manipulating their own deal, they actually feel better than when that salesperson leaves, comes back with a payment that they have no idea, like they don't know what's behind it. What we typically see also is that this eliminates that back and forth. I recently bought a car, it was over a year ago, and one of the things is I didn't know what I wanted to do, right? And I've worked in the business forever. Do I want to finance? Do I want to lease? And what ends up happening is my interactions in this deal, there was a lot of back and forth where I was getting printouts from the DMS, but I didn't see what was behind it. And it caused me to really question the entire thing. It caused me having these multiple printouts because I was changing things. What if I put more down? What if I finance? What if I lease? And they're being transparent, but it's not in real time. It's sending over printouts to me. It caused me to actually want to go and research some more. And I think that's what ends up happening, because there's still a lot that's happening behind the curtains. The customer's like, I don't know about this. Let me go home and think about it, right? And we're finding through this experience of empowering your team to actually talk numbers with the customers and lock in that deal with some management oversight, the customer is much more likely to fight less, say yes, and in many cases spend even more money on the back end. A couple examples of that. This is Riverhead Mazda. They are in New York, upstate New York. They are a brand new dealer point in this area. There was a dealer previously to them of another owner. And they came in, and in 2 months, they started implementing this way of selling, where they're actually empowering their salespeople who aren't seasoned veterans when it comes to selling to actually work numbers side by side collaboratively with the customer. This dealership is out of a trailer right now while their main store is being built, and has broken records, not only by per salesperson, but as the dealership as a whole. This is the GM, Michael Lucky, who I'm just going to show you a quick quote of what he said. Hopefully that works. And it looks like let's see if that works here.
In terms of production,
of course, my sound's not working.
We've sold more cars last month.
I will let you know what he said, which is he talked about how in the 25 years of Mazda's history, they have not sold more Mazda has not sold more cars in that region in 25 years. They have broken that record relative to any other Mazda dealer in the region. So they are seeing the results of really just changing and making tweaks to the way we present numbers to customers. We also have to offer choices to give context to the customer's decision. We talked about choices earlier, and there's different ways we can do that. One way that we see is lender offers, right? This is a really contentious conversation that's happening when it comes to lender offers. And what's interesting is the snapshot you're seeing does not reflect reality. I'm looking at some of these rates, 3%, 5%. We're not in a world of those low interest rates anymore. I love this story. Joe St. John, he's our VP of training, who's been working deals using our platform. He talked about a customer who came in and said, I refuse to buy any car unless you can get me approved for less than 10%. And this guy was ready to go. Well, that's not where this customer was from their credit standpoint. They were going to get above 10%. So Joe's working, the system. He goes, hey, how about we submit your credit app and let's see what comes back. Well, what came back was 12%, 13%, and 14% from 3 different banks. The customer easily chose the 12%, right? So they went in fighting. I refuse to do anything more than this. But when they saw the logos from the lenders, it suddenly changed their framework from, no, I'm not going to do this, to, oh, now I see that 12% is actually the lowest I'm going to get. And this isn't the dealer saying it. This is coming from actual banks in which they trust. And so I think we have to think about, how do we use technology, not just the screen and showing that with the customer, but this real-time lender approvals and from banks they trust, to overcome the fight the customer is going to have when you have to deliver that bad news that they're not going to get a 5% interest rate given the times or given their credit. Let's make the technology the bad guy and not your salesperson or your management. Another example of that, of offering choice, is F&I products. I was amazed at a dealer I recently visited when I just sat there on the other side and heard a very green pea salesperson who was, they believed in end-to-end at this particular store, one person selling, who was presenting F&I products. And he's presenting the menus and the customer goes, I'll take that middle one, right? Like the fight wasn't there, because once again, we're not introducing one particular product, one choice. We're packaging the choice in a way that elevates the value of the package and gives the customer that context of, I'm not paying the lowest price, but I'm certainly not paying the highest price. As we talked about earlier, the middle is what most customers, it's a safe choice, and offering these choices creates that environment. Ferguson Buick GMC, if you look at our website, you'll see a testimonial from them, but they talk a lot about putting the customer in that driver's seat, that perceived control. One of their management said it makes them feel like they're in the driver's seat, makes them feel like they're picking their own deal, building it the way that works for them. And when you give that customer that kind of latitude, it's a whole lot easier to close a deal. I mentioned Hello Auto Group. They are a one-person, one-price dealership. This is one of their salespeople, going over F&I products, but same kind of thing. This is a store I saw that, you have green pea salespeople that are able to really effectively discuss F&I products. It's not about just the menu, the videos, the collateral that they can use that can aid them in having a very strong presentation. That is the beauty of technology. It's not only about bridging that gap with the customer, but it's actually about empowering your team to more consistently and efficiently sell the deal, sell F&I products. And we are absolutely seeing that in our showroom platform, and what we're seeing from our top performing dealers. They are not only making the customer happy, they're expediting the yes and closing deals faster, and absolutely making more profit on the back end. So I want to jump to questions. If you have some questions, please put them in the chat or in the Q&A. Let's see, I'm looking at that. We have a question. It's more of an international question, but Alejandro says in Mexico, they prioritize the OEM financial institution over external banks. With our platform in particular, we can take a credit app, we can return an instant offer in about less than 90 seconds. We can show both the OEM captive bank and any of the dealer's preferred lenders as well. So captive and non-captive banks. Any other questions that are coming in? Oh, there's a question about, and touching on, I had mentioned something about enabling your salespeople. The concern is, aren't we concerned that inexperienced salespeople, would give the car away, in essence, give the car away? And it's something that we hear all the time. That is probably the #1 concern. Like, I want to make sure that my green pea is not out there doing something that is not in line. For us, when we're working with our dealers, the dealer is setting up those guardrails. Like we're working with them to understand those guardrails so that when the salesperson is discussing numbers, for example, they're presenting, it's in line with what the dealer is comfortable with. If something is out of line, for example, if that salesperson gets a credit app from a customer, and in that credit app, instead of putting $100,000 of salary, they fat finger and put 10,000, our system will not submit that credit app because we know it's completely out of line and of what would be accepted, and it will alert the manager. So in all of these situations of empowering our team, the manager is always involved. And it's not about replacing the manager, replacing F&I director. It's actually about enabling them to do more. Something I should have said earlier, the sales manager is the busiest person in the store. Lots of screens up, working lots of deals. And then oftentimes we don't have the time to do some of the value-added things that we should be doing. So that's really what it's about, is efficiency of everybody's time. Rashawn asked, is there a minimum size for you to work with dealer-wise? Are you willing to help onboard, train brand new dealerships that want Audify in their tech stack on day one? Absolutely. So, we work with franchise and independent dealers. Really the biggest criteria for us is that you have some banks. So for example, there are independent dealers that we can't work with because they don't have the lenders in place already. For us, you have to have some, 1 to 2 lenders already in place so that we can then present them through our system. I also love your question about training and onboarding, because it's something I've worked in tech for decades. And one of the things that I see that's really a problem is that we sell on the vendor side, we sell the technology. We come in and do 2-hour training for your sales team and say, good luck. I hope you guys do well. Particularly for our showroom platform, when we launch a dealer and we're enabling salespeople to use our technology, we are in the store for 2 weeks, onboarding that dealer, training. And it's not just classroom training, it is selling cars side by side with that dealer. We are helping them, we are working with them within the process, which is why our training team are former general managers, former GSMs, people who have been in the seat before, and it's really about coaching, because we're really not changing a process, but we might be making tweaks, and we have to get the team fully invested in using that technology, or they'll just revert right back to what they did before. So good question. We have those resources, because if we don't do that, this won't work. Adoption will not be there. Any other questions that have come in? Okay. Well, I hope that you got something out of this. Thank you for being here. I do want to leave my information for you. You can always email me at kwise@audify.com. And if you want more information on some of the technology that I talked about, whether it be digital retail or whether it be our showroom solutions, you can always go to audify.com, just click book a demo, and we'll have one of our salespeople reach out to you and review our platform. I want to thank you all for being here, and particularly shout out to the international folks. Appreciate you taking the time out, and feel free to reach out to me if you ever need anything else. Thank you so much. See you next time.